Hey, welcome to this week's Final Mile episode where we answer all the questions that you guys send us either on YouTube, you guys email us directly, or on our Facebook group. So let's jump right in. First question we have is, hi, I would like to start a freight brokerage company in Florida. Do you know what insurance I need to have and how much are a surety bond? You want to give that one a stab first?
Yeah, so your insurance is really kind of dependent on, shippers, customers, what the requirements are. You're going to need contingent cargo, and then your surety bond. It's 75,000. But how you go about getting that? I think there was some FMCSA instruction on like bond versus something else. I can't remember. I know it
Trust fund.
changed. Yeah, the
Yeah.
trust fund thing. But yeah, that's kind of what I've got in terms of
Yeah.
insurance and bonds.
I'll start with where they started this saying, I would like to start a freight brokerage. So there's two steps basically. What do you need to operate a freight brokerage? Just legally. The FMCSA is going to require a surety bond. Like you said, it's either a $75,000 bond or 75 grand sitting in a trust. What is a bond? Bond is basically an insurance product where an insurance company is going to say, hey, we'll set aside 75 grand for you and we're going to charge you a small amount in case it gets used. And it's way less than 75 grand. So like you might pay 1,000, you might pay 3 grand based on how likely it is your company needs to use this bucket of 75 grand. And how they determine what you're going to pay is usually based on your personal credit rating. Like, hey, either your business, maybe your business and you've got a track record, you've got good credit, you've paid your bills, you're going to pay usually a lower price for that bond. If you don't, you're going to pay a little bit of a higher price. So they are priced according to the person actually applying. There's not one flat number. I mean, that's pretty much it. That's what you need to legally operate a freight brokerage. And what is the point of the bond? That is, hey, if you do business with a shipper and you don't pay your carrier, the carrier goes to that insurance company who has your bond and says, hey, Benjamin's freight brokerage did not pay me 5 grand. The bond company reviews the situation, decides, hey, if you owe that trucking company money and you didn't pay them, they cut them the 5 grand and then your bond amount goes down and then your premium goes up, right? It works just like insurance, but it is a bond. Now, what you alluded to is there are lots of other insurances you will need to work with specific shippers. Those are outlined and determined by the shipper, not the freight brokerage. The most common insurances they're going to require you to have are what you said, contingent cargo insurance. And the second is usually like an umbrella policy or a general liability policy. The third, you'll sometimes see like workers' comp, which never comes into play, but can be required. And contingent cargo, this is the most often understood one by shippers and brokers. Contingent cargo is not the same as cargo insurance. So just basically speaking, if I hire Steven's trucking company, he has 100 grand in cargo insurance. My shipper is going to require that I have contingent cargo insurance, usually for 100 grand. Okay, well, the shipper requires to vet me, the broker, for that contingent cargo. Most shippers don't understand that contingent cargo does not pay a claim. If there's a claim on the load I ran with Steven's company for 80 grand, that claim is filed on the carrier because the carrier is the only type of entity you need to own a truck to have cargo insurance. Contingent cargo is required by shippers, but rarely comes into play and only pays out in like very obscure situations where like something should have happened that didn't happen. And we can bring somebody on insurance to really go into it, but like they rarely ever come into play. But almost all of the brokerages have contingent cargo, mostly because shippers require it, but it rarely comes in and actually pays out. The same with workers' comp. I'm never sending an employee to my shipper's facility where they could get hurt, fall, be near a forklift, fall off a truck or a dock. That's why they want it. That's why a carrier has it. But they often require brokers to have the same requirements as their motor carriers for simplicity and liability. But our insurance is nowhere near the same, does the same thing, or covers the same thing as a motor carrier. That's why the main function in our job and why it's so important to do this correctly is vetting your carrier's insurance. Because the reality is what it really looks like for a freight broker is my shipper gives me their insurance requirements. I got to meet whatever it is to just get a load. But my job every day is that every time I send a truck in, I've got to make sure those requirements are met by the companies I hire, because their insurance is the one that is really protecting my shipper and their cargo.
Right. And just to add a little extra to that is, and what a lot of brokers miss is exclusions on cargo insurance.
Yeah, go through a couple.
Yeah, so the prime example is seafood. A lot of people do not understand that seafood is typically not covered on insurance, and if you're not looking for that exclusion list or getting a breakdown of the whole insurance policy there, and you haul seafood with this carrier, it is 100% not going to get covered.
Reefer breakdown insurance?
Yep, reefer breakdown, errors and emissions, things like that. Like, for example, like a reefer breakdown, if they have cargo insurance and they have reefer coverage, but if a reefer breaks down because of a driver's error, reefer breakdown coverage will not apply.
Yep.
If it runs out of fuel because the driver didn't put fuel in, different things like that. So like looking into the policy is also as important as making sure they have that number that covers the cargo value.
You really should, if you own a company, train all of your carrier team and your brokers to understand the basics of insurance. Also, like scheduled auto versus all auto versus like leased on trucks versus rented trucks that are rented or leased by the carrier that has a staff driver in it. There's all very different specifics on which ones apply and which ones don't. And if you don't know this, you could be hiring a truck that you think is insured and it doesn't. The other is just a simple making sure when you book a carrier, you ask the driver on their checkout, is your reefer in good working order? And everyone goes, well, why does that matter? Like, that seems like a silly thing to ask. And I'll give you an example of like, I had an instance one time years ago where somebody booked a reefer. They forgot to ask the driver. The driver had an alert on his truck. It wasn't related to the reefer. It was related to like an oil filter, right? But since that alert went into the computer of that carrier before they picked up the load, the reefer wasn't working right. There was a claim and their insurance said, no, like we're not paying this claim because there was an alert for maintenance and this driver should have had this truck checked by an authorized maintenance person, a facility before they loaded. Since they didn't, even though it wasn't a reefer alert, we're not paying the claim. So it's very important that you're checking and making sure that the drivers you're booking know whether or not their equipment is in good working order, because that is a determining fact in whether or not that insurance will actually pay if something goes wrong.
Yep. Yeah. And I've got, I require it now on everything, but one of my customers, I started doing it ahead of time, was making sure that whatever reefer they're using is new enough that the information can be downloaded, whether it's at a shop or they can do it remotely. Like, if I can't download the logs from your reefer, you're not going to haul my freight. It's just, and 9 times out of 10, you don't need it. Everything goes great, but it's that one edge case that could really ruin your week, your month, or your year.
They're huge. I mean, you're talking about trying to make $100 or $200 on a load here and there. You end up in a scenario like this, you could lose $100,000 like that. So these are not small things. All right, next question. I appreciate the valuable information you share with the community. I've got 3 questions. The spot market for loads isn't necessarily available on load boards. Can brokers find loads directly on those boards, or is the only way to secure shipments to find a customer or shipper independently and then to post those loads to move their freight? Thanks for your time. Yes, kind of answered your own question. The only way for you to secure loads as a freight broker is directly from a shipper. Then you use the load boards to negotiate or to find a carrier. Carriers can find loads on a load board because brokers put them there. But a carrier doesn't have a license to give that load to another party. That's why it primarily works that way. Brokers, as intermediaries, we are licensed to take a load from a shipper and then negotiate it with a carrier. Carrier can only take it and then haul it. So that's why you see carriers on the load board and brokers. Shippers technically could use it, but don't, and for one primary reason, they're not built, staffed, or usually have the software and tools to vet carriers very quickly, get them onboarded very fast, and book a load in a short amount of time. That's the value brokers provide to shippers that shippers can't typically do, which is also another reason why when all these carriers say we don't need brokers, we'll just work with shippers directly, like, I don't think they necessarily understand shippers wouldn't do that because shippers don't have the staff, the software, or the understanding to do this quickly, or the operating protocols from their legal and risk teams. Just because a shipper hired more people, theoretically, other brokers, and they go, oh, well, I could do this, most of the time their legal and risk team won't allow them to onboard a carrier in 30 seconds to 2 minutes the way a freight broker does, because that's not the business they're in. That's not what they do.
Right. Yeah, it's definitely, it's a, it's a cost of doing business for them rather than the actual nature of the business. And,
Yep.
And one of the things I kind of want to point out to the whole, anyone starting out, especially if they're not knowledgeable of the business, like well, is there like a load board I can go to? Well, no, you can't. But on top of that, I was in a conversation with Ken Adamo and Craig Fuller. Ken Adamo with DAT and Craig Fuller with Freightwaves and Sonar, and they both agreed that at any given time, whether the market's good or bad, the spot freight that you see on load boards makes up anywhere from 2 to 6% of all domestic freight.
Yep.
So why would you go to the smallest basket to get business? You gotta go elsewhere, and you can't even get business there anyways as a broker. But why would you go there in the first place?
Very, very true. All right. Next up, we only work with asset-based companies. If I give you a load, I'm taking all the risk, and you've got no skin in the game if things go wrong. How would you handle this very common objection? It is a very common objection, and it's not untrue. If you don't have a contract with a shipper, right, like you really don't have liability. You're just the intermediary, which means if you hire a trucking company that doesn't have the insurance, doesn't have the right equipment, has, like you said, a reefer that is broken down and isn't maintained, and there's a claim, if there's an accident, or if the load gets stolen, as a broker, you really don't have any skin in the game. And the only thing a shipper can do is not pay you for one load. So unless the shipper owes you a whole lot of money from other loads they've ran, that is the only skin you have in the game, which is why shippers will often hold 50 or 100 grand in unrelated invoices if a claim happens. Because we don't, as brokers, we're intermediaries. We don't own trucks. If they sue us, there's not much they can go after in assets. That's a very real risk that shippers take when using brokers. Why do they do that? Because most of them still need brokers to get them trucks last minute to be able to hire and vet them, like we said earlier, very quickly. They're not built to do that. So a shipper that only works with motor carriers probably doesn't have a lot of freight every day, meaning they probably ship less than 20 loads a week, which means if that truck can't make it that they booked, they can wait until the next day when another carrier can come in. Not every shipper has that ability. So the first thing I would say is, like, if a shipper is loading such a small volume, like 5 to 10 loads a week, sometimes they don't need a broker because, again, their freight can sit there an extra day or two and it doesn't have a negative effect on their business. So it makes sense for them to only work with carriers. If it's a shipper that is moving usually over 20 to 25 loads a week, 5 to 10 a day, like they almost have to use a broker because too much of their freight would get backed up because of trucks just getting stuck in traffic and held up at receivers. So that's the thing to understand from the shipper's point of view. From a broker handling the objection, how do you handle this one?
One of the first things is, so the person comes off as standoffish, right? Because you have no risk, and so you want to step that down a little bit. Like, well, what I would say is, I'm sorry you feel that way about brokers. Obviously, you've been burned in the past, but let me ask you, are you just not using brokers at all in your business? And then they'll give you some more information. And so you're alluding to the fact that there are bad brokers. You've obviously had a bad situation, but then you end it with, so you just don't use any brokers at all, right? And maybe they'll tell you, no, we don't. And you can try to dig in a little bit more with, well, what are you using assets for? Do you have a lot of volume? Just kind of trying to get the information you were talking about out of them. And, they may just be irritated and not want to talk to you that day. And that's something like, hey, this is the information I got. And then 2 or 3 weeks, a month later, you call them back.
Yeah. And it's a good first step. You've got to be able to get more information to be able to progress it. I think that's the first thing in an objection. I think the way that I approach them is like, I don't ever approach them combatively, right? Because it's that saying, it's like, you might win the battle, but you're going to lose the war. I'm not trying to prove them wrong, right? I'm trying to get them to trust me and to provide more information to see if there's an opportunity. So the only thing different is like I'm gonna just address it head on and be like, yeah, absolutely. I mean, there's very different liability for a broker than directly with a motor carrier, right? For sure, they're different. There's different things in case law. There's different things in liability. Out of curiosity, like, do you guys have a shipper broker agreement in place? Would be the first question I ask, and they might say, no. Why would I need that? And I could say, well, I have other customers that they put things in their agreements that do move the risk onto brokers differently than if we don't have one, whether it's subrogation, whether it's increased liability, whether it's the ability to withhold payments of unrelated loads if something goes wrong. There are things we can put in writing that can make you feel a little more comfortable with that risk. But even putting that aside, Stephen, the thing I would also ask is like, hey, like, what does your kind of load volume look like on a daily, weekly business? Like, it might not make sense for you guys to use brokers. If you don't need trucks last minute and you don't have orders coming in that need to go out in a short amount of time, like, it might make sense for you just to work with carriers. Can you tell me a little bit about like your load volume and your need to get product either picked up or delivered? Because if they come back and say, yeah, you know what, like, we ship whatever building materials and none of it really needs to go out same day. We've usually got 3 or 4 days to get a load picked up and delivered, and we got plenty of space at the warehouse and my customer doesn't need it that fast. Hey, that makes perfect sense. If you ever do need anything, a last minute load, shoot me an email. I'd be happy to help. We can get some things in writing to help you with the liability, but it sounds like you really don't have a need for a broker. Because now I'm building trust by going directly at their concern, explaining there are things we could do, if that makes sense. Maybe it doesn't. Trying to understand a little bit more, like you said, about their operations to see if, hey, if there are instances where you might need that or a project maybe or things like, hey, we can take a look at it with you and take the steps to make you feel a little safer and more secure. And I can use maybe possibly, if that does come up, like a third party story, right? Of like, hey, I've got other customers that have expressed this concern. We've gotten agreements in writing that put more of that risk on us as brokers. We'll take more of the responsibility, as we should, to make you feel better. And also maybe we'll negotiate the right for you to withhold money should anything go wrong. So we do have skin in the game. Because the reality is on the first load or two, there's not much skin. But if you're moving 10 loads a week with me as a broker, I do have skin in the game because you probably owe me 4 weeks, 10 loads a week. You might have accounts receivable to me at any given time of 100 or 150 grand. So like there are skin in the game in the scenario as things progress in a relationship. Being able to walk through and explain how you could mitigate those individually could create an opportunity. Or you might find out at the end of this conversation, or to your point, 2 or 3 conversations, there really isn't an opportunity. But this is the job of a salesperson. It's to understand their concerns, walk through them, find out whether or not you can address them, and if you can address them in a way that makes them comfortable enough to work with you. Sometimes the answer is no, but sometimes it's yes. And it's an odds game, right? Like, do this 20 times a day, you'll get 1 or 2 that work out and probably 18 no's, right? Your job isn't to get everybody to say yes to you. Your job is to find the right fit. And it is weeding through a lot of no's to get to the yes. That's why we get paid as salespeople. It's not because everyone you call is giving you a yes. You wouldn't get paid a lot of commission if that was the case. You can hire anybody to do that job. Right. The job of a salesperson is really to address more no's than you're ever going to get yes. It is a job that shouldn't be called sales. I always say like it should be called rejection because that's what you do all day. You get rejected all day and maybe get a yes. That's really what sales is.
Right. And one of so the thing most people hate, and I'm generalizing, but it's probably pretty accurate. The thing most people hate is getting stuck on sales calls. You answer the phone, they say something that kind of hooks you in the first 20 seconds, and then you realize, oh, this is a sales call. But what people do like to talk about is themselves or their job or what they're interested in. So one of the things that I try to tailor all my communication to, whether it's email or on the phone, is, I try to get across this isn't a sales call without saying the words, this is not a sales call, and showing general interest in their operations. Like, I want to learn more about what you're doing so that I know if I want to work with you or not. And also conveying that I don't know if I want you to be my customer, but I do want to know more about your business is also something that is going to make them step back and think, because most of the phone calls they're getting, 15, 20, 30 a day, are people like, hey, we've got the cheapest freights with
Give me freight.
the most
Give me
trucks.
loads.
We can
Clearly won
we can do all
something.
this.
Don't know anything
Yeah.
about you.
Yeah, and it's like every
Self-interested.
yeah, it's every sales call you get. Like right now, I'm getting a bunch of like estate calls. Like, hey, we've got this silver that we got off this estate sale, and within like the first 45 seconds, I'm like, dude, I can't talk to you right now. You're driving me nuts. So yeah, it's definitely feeling out that, just conveying that right away. That like, it's not a sales call. I just want to talk to you about your thing, and see if I want to work with you.
Yep. My favorite canned line for that is, hey, look, I genuinely don't know if we'd be a fit to work together at all. But hey, for this reason, and this reason, I thought it was worth a conversation to chat to see if it might be a fit. But again, like, I don't even know if we could work with you. But I thought it was worth a short conversation to see if, hey, this lane I think you guys run works really well for this other customer I run. It seems like the lanes match up. If the days of the week seem to match, we could probably get you a pretty decent rate. These carriers are super reliable. Thought it was worth the conversation. But again, I don't even know if we would be able to work with you. I don't know if we'd be able to get you credit. And I don't know if any of these things work out. That's why I was giving you a ring, right? Just trying to connect with them, telling them very quickly why you think it might be a fit. But I always, right after that, to your point, go, listen, I don't even know if it would be a fit to work with you, but I thought it was worth a quick chat. Now you take all the pressure out of the room. You can understand a little bit more whether that is a fit, and then see where it goes from there.
Yep, 100% agree.
Sweet, man. Any final thoughts?
Nope. Yeah. Keep leaving us questions, comments. Let us know what you're working on, what areas you're seeing problems in, and ask us the questions so we can keep answering them every week.
Sweet. And remember, whether you believe you can or believe you can't, you're right.
But no, I was